Ever since Russia invaded Ukraine, the threat of cyber attacks from Russian hackers is really in a heightened state. Hello everyone, this is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, also known by many of you as Mr. Valuation. This is really a subscriber request, if you will. I usually do this on Tuesday, but I'm going to be doing it today, and I'll be doing subscriber requests tomorrow as well, but this is Monday. But the point is that I was asked to look at cybersecurity stocks. Now, frankly, I don't have a lot of personal knowledge of these companies, but they're very, very interesting. As I said in the opening remarks, cyber attacks, the threat of cyber attacks are heightened today with what's going on in Russia. And everybody knows how notorious Russia is for hackers. So what I've done here is I've put together a portfolio. 4 or 5 of these names were supplied by subscribers who requested it, but then I did a little research and I came up with the top 10, actually the top 11 cybersecurity companies. And these range anywhere from very small companies in the startup phase to the 800-pound gorilla in the space called, Microsoft, which is getting heavily involved in cybersecurity. So there's a lot of opportunities in this space, obviously. One of the things I'm going to be going over is how quickly these companies are growing. However, let's go ahead and get into the fast graphs on these, and let's start looking at these companies, starting with the smallest and moving up to the biggest. Rapid7 is a company that's notorious for cyber security, and you can see I'm looking at operating cash flow here. Their operating cash flow has not really been growing very much. More recently, it's accelerated up into the 30% range. They had one year in 2021 which was obviously a heightened year where it grew by over 400%. During the pandemic, their operating cash flow actually dropped a little. But when you look at this company from a standpoint of operating earnings, you really don't see much here. The company is not, it's lost money most years. However, it is forecast to start growing going forward. And looking at forecasting is expected to grow at 30%. But nevertheless, the stock is actually very expensive. So one thing you have to be aware of as I go through each of these companies is that they don't look so hot utilizing what I would call normal metrics. So here's operating cash flow for Rapid7. But one area that they do look interesting on, 2 areas actually, is EBITDA. Not so much for Rapid7 here, but sales is another area. And I'm going to be covering these in each one. So based on sales, this company almost looks attractive if you were using this graph to make your judgment. But I want you to be aware of the fact that this is 10 times sales that we're looking at here. You can see that Rapid7 was very, highly priced, and it's actually come down quite a bit here just in recent time. Now, with FastGraph, if you're a FastGraph subscriber, I encourage you to go to the external links and go to the company's websites and look at, what the companies have to say about their cybersecurity. According to Rapid7, we help protectors navigate the complexity of cybersecurity so you can build future-friendly security programs. So, cybersecurity is really mainstream, and you can see their sales are growing nicely. But I do, want to caution you again, do your homework and do your due diligence and look at these companies. The next one I'm going to look at is a company called Tenable Holdings. I'm looking at operating cash flow here. You can see these stocks have been very hot, very, very expensive, trading at high multiples. If I look at things like adjusted operating earnings, the company does have earnings growth, but it's trading at incredible PEs, like 178 times earnings, an earnings yield of less than 1%. Again, when you look at them from a standpoint of sales, they begin to look a little intriguing because sales are expected to continue to grow at a very rapid rate. And when you look at it from a standpoint of EBITDA, once again, you see that they look very, very expensive. So, you've got to do your due diligence and look for the right buying opportunities. Some of these companies are small. For example, here we're looking at one that's 6.1 billion, Tenable Holdings. But again, go to the external links, go into the company's website and look for what the company does and try to learn a little bit about them. And if you find some here that really suit your fancy. This is one of the newest IPOs, and I like this choice because I also want to make a point about IPOs. IPOs usually come out hot, or often come out hot. I shouldn't say usually. And then what happens is they normally come back to reality. So here we've got a situation where this stock, Centin 1, is trading at 46 times sales. That's an extraordinary multiple of sales, if you will. Okay, but sales are expected to grow at 80% a year going forward. Now, if I go strictly to the forecasting graph, that number drops down to 30%. All right. So again, be careful and don't get overly excited about these companies. A lot of their growth is in the past and not in the future, but this is a new IPO. Again, you look at it from metrics such as EBITDA, doesn't look so hot. Operating earnings, we don't even have any. Diluted earnings, if you will. The company's losing money. This is really all about the hype of sales. The company is growing their sales quite fast. But once again, you want to go into the corporate website and very quickly look at what the company's doing and what they're offering in terms of cybersecurity and make your own judgments for yourself. The next one is one of the more established companies, NortonLifeLock. Norton's been around, providing internet security and password security and so on and so forth for, well more than a decade. The company is almost a $17 billion company. So it's, one of the larger ones. From a standpoint of operating earnings, that's cash flow there. It looks, it's only moderately overvalued based on what is expected to happen in the future. The company is expected to grow. It's one of the more established names out there. If you look at this one again, from a standpoint of sales, you're going to see that sales were hot for a while, but sales are just now beginning to improve. But this is a more established cybersecurity firm. And, most of you should be familiar with Norton if you have computers and you're, looking for password protection and that kind of thing. The next one on the list is Checkpoint Software. Checkpoint is a very interesting company. I like to go through their website here. Staying safe in times of cyber uncertainty, protect your organization from whatever may occur. And then they offer you, secure your networks, CloudGuard, Harmony. So, they're a leader in cybersecurity. They're one of the more established. They've had, about 8 or 9% growth going forward. That growth is expected to drop dramatically. Looking at them from a standpoint of sales, however, we're still looking at 5 or 6%. So this is a very popular name. But based on what analysts are seeing out here, it's not really expected to provide a lot of growth, although it does look like one of the better valued in this category that I'm covering here for you. Scalar is kind of a hot one, a famous one. It's actually been growing at a pretty attractive rate here. I've got to shorten the time frames here to give you some growth. It's been growing at 57%. I shorten that again a little bit more. It's still growing at 54%. It's forecast to continue growing at about 30%. This is operating cash flow. If I look at it from a standpoint of EBITDA is expected to grow dramatically. So this could be an opportunity. Looking at it from a standpoint of price to sales, it's expected to grow sales at 30%. And it's technically come within the valuation corridor, like I like to call it. It's attractively valued on that basis of looking at sales. Historically, the company has traded, at about 40 times sales, which has been the growth rate of their sales, roughly 39.73%. So this one could be one that you might want to take a hard look at. Scalar, company's currently over $30 billion, but it is expected to have a nice future. Cloudflare, another one, if you look at operating cash flow, operating earnings, you don't see much. There's not much in terms of fundamentals. From a standpoint of EBITDA, there's not much in terms of fundamentals. From a standpoint of outright sales, the company is, trading at 45 times sales. Its normal price to sales since they've been public, which, only goes back to 2019, has been about 44 times sales. They're forecast to continue growing sales at 30%, but note that that's a slowdown in what their sales are looking like. But again, Cloudflare looks reasonably attractive. And, the company does have some partner programs. And, if you look at their partnerships, they do partner with other firms to provide this cybersecurity. So these firms attack this industry from different angles. Again, I'm not an expert here. I suggest you do your own research and due diligence. Crowdstyx Holdings is one of the more famous and profitable ones, $39 a share. Its operating cash flow growth has been reasonably good. If I shorten the time frame, you'll see that it's been growing operating cash flows at about 70%, since 2020. If I look at it from a standpoint of sales, the company looks, very inexpensive relative to its normal price to sales. I want to make that clear. But their price to sales has been over 27 times sales. So that's a very, very high, price to sales, but they are expected to continue growing sales at over 30%. So if you're looking for aggressive, growthy stories here, and you're not so much, focused on profitability, but more focused on how fast a company can grow their sales, then Crowdstyx might be one that you'd want to look at. Fortinet is another very interesting one. It's got, it's generating very good operating cash flows. It has some of the better fundamentals of any that I've showed you here. Their operating earnings growth has been very good, but on that basis, the company does look very expensive. If I go into the sales number, they also look very expensive based on, their historical price to sales has been about 6 or 7, which is more realistic, more normal for companies, even growth stocks, to trade at a more normal price to sales rather than the 20 and 30 times and 40 times that I've shown you with some of the previous companies. But this company does look very, very expensive. From a standpoint of operating cash flow, it probably looks the most reasonable, but cash flow is only expected to grow at 20% or 21% a year going forward. So Fortinet is one also you can consider. Pelo Alto Networks is another one that's pretty established. They've had, very, very good sales growth over time. Their normal price to sales has been about 8. They're currently trading at almost 11, so they're trading at a premium to their sales. If you look at it from a standpoint of operating earnings, they do have very good earnings growth at over 40%, but on that basis, they're very expensive. If I look at them from a standpoint of operating cash flow, they look attractive, but keep in mind their normal priced operating cash flow is about 24. That'd be this blue line on the graph, and they're trading currently at about 30, 31 times. Looking at forecasting, their cash flow is expected to grow at about 25% a year. They don't look, all that bad. Then, of course, if you really wanted the safety, one thing I want to point out before I go to my last and final look here is if I look at the portfolio review, you'll notice that none of these have credit ratings. This is all a new industry. It's a very fast-growing industry based on sales, as I've shown you already. The companies, we only have Norton Lock, which is only a double B rated, credit rating. That's not even investment grade. But then we have the final choice here, Microsoft Corporation, which is getting big in cybersecurity. Microsoft has been very, very overpriced, in my opinion, even though it's a formidable company with tremendous growth. Probably one of my favorite stocks on the planet if I could buy it at a reasonable price. I want to make that clear. I'm not trashing Microsoft. I just don't really like the price. Now, from a standpoint of sales, this company is trading at normally about 6 times sales, which is, really attractive. It's even traded only at 3 and 4 times sales coming out of what I call the Great Recession here back here. But more recently, it's been trading at premiums to price to sales. But we can see, they're starting to get a little chink in the armor here. Sales growth is expected to continue growing at 15%. Now, this is a $2.17 trillion company. Analysts are expecting it to grow sales at 15% a year. You have to understand that's extraordinary, but you also have to understand that the stock is very expensive. But anyway, if you got a chance, if the market gives us a break here, because as we all know, we keep seeing, stocks faltering here with this Russian crisis going on. We haven't seen the effect of interest rates yet. And I do think stocks are somewhat vulnerable to a correction because we've been in this long-running bull market. But anyway, this is, quick look at 11 of the more popular cybersecurity companies. This has been Chuck Carnival. I hope you enjoyed this video. If you did, give me a like, share it with your friends, subscribe to the channel if you haven't already, ring the bell so you can be notified of future videos. I'll be covering some more traditional stocks here tomorrow and going forward, but I did want to take a look at cybersecurity, a very hot area here and an area that's kind of in the news with all the potential threats of Russian hacking that, could come. And, we all know Russia's notorious for their hackers. Anyway, thanks for watching. I hope you got some perspective out of this. Again, I apologize. This is not an industry that I'm really well versed in, but I am seeing some of the allure of some of the sales growth of these companies. And if you're a growth stock investor and a risk taker, I encourage you to make sure you do your due diligence first and try to be as careful with valuation as you can be. Anyway, thanks for watching.